Good morning, fellow option traders. This is Jeff, and welcome to the daily scan for Wednesday, September 18th, 2013. I was just kind of chuckling because I usually close the office door, not tight, before I start my recording. And if my little dog is not in the bedroom and she hears me talking, well, she's got to come in and see what's going on. So then the door opens and it sort of bangs against the wall. Not real loud or anything, but enough to make me turn around and look. Very distracting. Anyway, for today, market affecting news announcements. We have housing starts, petroleum status report, FOMC meeting announcement, forecast, and of course Ben's press conference, where if you ever watched one of those, you should watch one of those. How can anybody figure out what the hell this man is talking about? I have no idea. Anyway, moving forward, we have a couple of things I wanted to talk about today. First, let's take a look at foreign markets. Over in Asia, markets are currently closed for the most part, and they were also for the most part generally bullish. And then in Europe, across the board, we're up, fairly bullish, so it's looking pretty good over there. All right, let's jump over to the U.S. Okay, here we have, looking at a slightly bullish open. However, gold is right at 1300. Well, it was a second ago. Now it's back to 1300 again, which is sort of our support, hopefully, point. And oil is back up above 105 this morning. A little bit of a slight disappointment there as well. Looking at the account for today, the SPX/SPY 10 a.m. weekly is sitting here. It's actually in pretty good shape. The problem here is that we're just waiting for some of this data to catch up to us. I mean, there's not a lot of money in this, and we didn't get in till I think Monday. So that one is a little bit slow in developing. We can take a look at a chart. Let me move this over here. And we're looking pretty good here for this week on that one. And then our other holding is Tesla, and that also is looking slightly scary, but I think we're okay. I noticed this over here on the weekly, that the MACD never got below zero for quite a while here. Actually, since April or March, when it popped above there, and it's been above there for the entire time here. So it looks like it might be kind of running out of gas. So we're going to have to be careful with this one. The other one I wanted to look at is gold, GLD. This is the covered call that we have, or that I have. I don't know if you have it or not. I say we a lot, don't I? Just because I don't like to say I, so let's say we. And we're looking at it here. The current price is right at, the close here was 126.5. Okay, so what I did was I dinged up a little spreadsheet here, and this is our original trade. We bought the stock for $131.97 on 8/19 of 2013, so that's this year. It's about a month ago. And we also sold a September 134 call, which was really looking pretty good a while back. We didn't bail on it or anything, and so now we're in a little bit of trouble. But after that play, actually, the cost basis ended up being 129.66, and we can see here that the current price is 126.5. So this is a losing trade at the moment. But wait a minute. We can definitely sell, and this is why covered calls are good things, provided the stock doesn't tank totally. You can see here that if we were to roll the 134 September to an October 129, we would collect $2.05 in credit as of last night when I put this together. That would bring our cost basis down to 127.61, and should the stock move up to this new 129 level at expiration and expire above 129, we would have made $1.39 on the trade. The question is, will it get back to 129? That is the question. Okay, so that would be getting pretty much back to our former cost basis. Okay, so if we were to roll it to an October 130, we would collect $1.70, a little bit less. Our cost basis would be $127.96, and if we get called out, that would be $2.04 in profit. Same thing goes for the 131, where we would collect $1.40. Our new cost basis $128.26, and if we get called out at 131, we would collect $2.74. Of course, the question here now is gold going to continue down? Which strike am I going to roll to? So we're going to be keeping an eye on this today and tomorrow, and here's the reason why we're not going to jump into this right away. The big reason is that this call, this 134 call, is at 6 cents, and I'm waiting for it to get below, or get down to a nickel or below. You can see here that if we were to buy it back, we'd have to pay 7 cents. So I'm looking for that nickel or below. So what I will do in two separate transactions is buy this back and not incur any transaction costs, and then roll to whatever strike I deem appropriate at the time based on current price action, I guess you might say. I'm not going to jump into this and try to collect as much as I can, because you can see that if I should get called out, even though I would have collected a lot, I would not have ended up with much of a profit. And you can see that as I move up in the strike price, that actually if it gets called out, you make more money. So the story here is that covered calls are neutral to bullish trades. So if the stock is not neutral or bullish, you could get into a little bit of a trouble and could end up with a losing trade. However, the reason why I went in on GLD is because I'm overall bullish on it, and it may have its periods of bearishness, but I'm sticking with it. So chances are I probably would do this 140 and just hang on to the underlying until I can no longer make these videos. I want to get the cost basis down to zero. It's going to take a very long time at this rate, as long as it is behaving this way. The best way to do it is if you're right at the money when you do your roll. That's always the best way to do it, because the highest premium is always at the money. The highest extrinsic is always at the money. All right, back to our alerts. We could see here that we have alerts on CF and GS. So I wanted to just take a look at those to see if we think that they're still valid. So let's take a look at CF first. Alright, perhaps I was a little bit too aggressive in setting this alert because it looks like it would still be a fairly decent play. So I'm just going to adjust the alert a tad, move it down to, I'm looking over at the intraday chart right now, move it down to that level right there. You get this little dialog box and I say replace. So now we're down here. So it's still valid. I'm sticking with it. Alright, oops. The other one is Goldman Sachs. Is that right? Okay, that alert may have been a tad bit aggressive as well, but I'm not moving it for today. I think it's still valid. We're still up overall here, looking very good as a matter of fact. The problem here is with my expiration choice. This is why I was tempted to cancel the alerts, because I'm not getting my 20 delta here. There's no way that I would go with, that I would go with a 165 here. Well, I don't know. I might go with the 165. The case is even stronger for CF, where there's no way that I would go with a 200 here. That's just a little bit too tight for my taste. But you never know what the picture's going to look like if the price moves up. The 200 might be a little bit more comfortable if we move up past this 201 and it looks strong. So we'll keep an eye on that. Alright, 12 minutes gone already. Time to get to the A+ list. And we'll quickly go through that. Alright. Let's drop that out of here. Apple. Staying away from Apple. Not real happy with what I'm seeing here, even though it's in an uptrend. Well, you know what? I'm going to keep an eye on this. So, I don't know. I don't know. Maybe for a overnight trade on Thursday, but nothing today. Amazon. Alright, we got a very nice hook here on Amazon, so throwing an alert in. Alright, moving right along. Baidu. I got a little bit of a hook here. I think we need to wait one more day on this. We're in sync here. That's a good thing. Just a little bit, confirmations are weak. So we would definitely wait another day on that anyway. Celgene. Coming down here to our target zone. Not ready for prime time. CF we already covered. Chipotle. We may get a move down here to our target area. The target area should also include the 45 level here. Okay. Google. Setting up pretty nicely, assuming that we are in a bullish, this would be a bullish trade. Not really sure what that would be right now. Would have been a good one, bearish trade. Bear call here would have been nice. Maybe a bull put will turn out that way too. Pretty flat here, no direction. Some upward movement and momentum on the weeklies, but down on the dailies. So a little bit conflicting signals are already covered. Goldman. LinkedIn. Looks bearish. Alright. Yes. It does look bearish. We got our hook here though, so I'm looking for a hook on %D as well, the red line. So we're going to let that one cook, simmer for another day. MasterCard just keeps on trucking. No entries for us on that one. Netflix. It's coming down here into our target area. Love it when it does that. I'm not going to do anything early on that price line. I was saying that this one also looks bearish, but we do have a hook up here, so I have to. If it gets above the high from yesterday, I got to do it. Okay, that one's set up. Tesla, we're in, and Visa, just like MasterCard, on a tear. Okay, so we have new alerts on Amazon and Netflix, and then we are still watching CF and GS with the alerts for today. Alright, so I wanted to also let you know next week is moving week. Videos might be sporadic. They may not happen every day. So be aware of that. So I'll be actually Wednesday is moving day, so Thursday I will be broadcasting from a new location, new permanent location for the Option Guru Studios. So thank you very much for watching. That's it for today. Have a great day and happy trading.